Ladies and gentlemen, traders, welcome back to another Relentless recap. As you're tuning in, hit that thumbs up. If you're a new viewer, consider subscribing to the channel. Let's talk about how I was able to make over $6,000 here today to start the new year. Well, we're up 5,800. We did give back a little off the top over 6K, but hey, we're going to round up as all good traders do. All right. The bulk of our gains came on stock POL and VYGR. We are red collected $800 on LBPH and SNGX, those two symbols. So the questions are always relentless. How did you find the stocks you traded today? Right? One. Two, what patterns and setups were you looking to trade? And three, how were you looking to manage risk on those patterns and setups that you were looking at? So we're going to talk about those three things here, but first remember our disclaimer. Remember that day trading is risky. Remember that day trading is a business. And here in the United States of America, 80% of small businesses fail within the first 3 years. That's the first thing. So know that day trading is hard. Day trading is not easy. It's not get rich quick. It takes time. It takes months, more commonly years. So as you're going through the learning curve, make sure that your exposure to risk is limited. Utilize the simulators. Utilize a small amount of cash as you trade. That way you're not harmed as you're gaining experience, learning, growing, and improving. Secondly, remember that the live streams and recaps are never an invitation to copy trade, right? The strategy is detailed and intricate. We'll talk more about it throughout the video. And lastly, I do not invest money for my subscribers, so be careful of fake accounts and impersonating accounts pretending to be me. I will never message you first. I will never ask for personal or sensitive information. I will never ask for money. With that being said, let's talk about how we found the stocks that we traded today. So I use Momo Pro. This is the scanning software that I use. If you guys scroll all the way down to the discovery section, right? This is where every stock in the stock market is listed in percentage order going down, right? So you come here last percent. Hey, what are the hottest stocks today? And for me, I'm looking for stocks that are up a good percentage with good volume and a limited shares outstanding, aka the shares that are available for the public is on the lower side, right? Because some stocks they have a ton of shares available. Think about the Apple, the Microsofts of the world, versus these cheaper companies. I don't even know the names of these companies. I just know the ticker symbol, right? So Longboard Pharmaceuticals, for example, which is a stock I traded today, up 300%, 44 million shares of volume, and 15 million shares available for trading, right? Available to the public, aka the float. There's a small difference between shares outstanding and float, but they basically mean the same thing, right? We don't need to be super technical like that. But yeah, you guys get what I'm trying to say. But anyhow, POL, which I believe is up 45%. We'll have to do some scrolling here. Let's come on down. POL was another stock that I traded. And so some people might say, hey, Relentless, why not filter for volume? That way you don't even need all these excess stocks that are lighter in volume. Well, you know what? We have our own filter here as well, which we can utilize. And that way, stocks like POL will be right here. So here we go. POL up 49% right now, 19 million shares of volume, 2 million shares in the float. All right. So that's how I found the stocks I traded today. When I came in at 8, what time was it? 9:15 rather, 9:15 a.m. I looked at the scans and these are the stocks that are up and in play. So at that point, Relentless, what are you looking at next? Once you realize a stock like LBPH is looking decent, right? Or a stock like POL is looking decent. Well, first and foremost, what we want to do is check, we want to check the pre-market chart. We want to check the daily chart. How are we looking? How are we doing? All right. How is that? Yeah, I think that's better lighting. Yeah. How are we looking? How are we doing? All right. And so pre-market POL, we'll see that there wasn't much, but when we look at the daily chart here, we can see that we're getting higher lows and the daily candle is about to make the new high, right? So this gives us a reason, an incentive to continue to watch this thing closely. So coming into the open initially, it was slower and lighter in volume, but we can see over time, we grinded up and volume also slowly increased over here. So the moment this thing got halted up, it hit the halt scans and everybody was on it. And it was a matter of, hey, can we see out of the halt resumption, the dip, and the rip, right? So this is a pattern that we look for here. It's a pattern that we teach, and it's part of our program, right? So the foundation, the basis of it is, hey, can we first resume higher? So we're halted up at 877. Can we resume higher? We did it. We opened up at 920. Now, can we either go up and then dip, or can we dip and then rip, right? So if it goes up and then dips, we're looking for the bounce back up, aka a dip and rip. Or if it opens up, dips and then rip, same thing, right? The other one just at first it goes up. So we resume higher, and this thing dips and then rips. That's essentially what happened in this candle, real time, right? In this green candle right here, real time. That's what happened on this green candle right here. Opens up, dips, and then rips. And with 1,000 shares, the example I like to use is 1,000 shares, right? 1,000 shares. 1,000 shares what's the open price? 920 is $9,200 worth of cash. With 1,000 shares, this thing went from 920 to 1062. My math is pretty bad, right? So what I'm gonna do is pull up the calculator here, right? 1062, 10.62 less 920. 142, a dollar. The stock went up $1.42. So with $1.42, with add 1,000 shares, that is $1,400, right? So with your 9,200, you could have essentially made 1,400 if you captured this entire candlestick end to end. Now, some of you guys might, and I'm going through this just in case there's anyone new who's watching. This is just to show you the potential of what the market is. This is just one stock out of 10,000 stocks that was moving today, right? Some lighter volume, some higher volume, right? Some, are famous like Apple, Microsoft, Google, Tesla. Others are companies like this, right? POL, smaller company, right? So it's called by the way, it's called Polished Ink. The name is right here, Polished Ink. You can look up the company on Google if you want, right? Polished Ink. So just in this one candle with 1,000 shares, right? 1,000 shares and 9K worth of cash, you could have potentially made 1,400 in this one small area. And look at how much the stock moved. This is a dollar move, right? $1.40 move. Today we went from $5 to $13. This is how I'm able to essentially be up 5,000 a day, right? It's because the stock gave these type of opportunities countless times over and over and over and over and over. So part of me, even being here is first understanding how to identify the right stock to trade. And then secondly, positioning myself in areas where the risk is a little lower and looking to optimize, looking for the opportunity to the upside. So let's pull up the video from today, right? Let's go into my files here. And let's go to the archive so you guys can see. By the way, this archive is uploaded for the students every day. All right. Let's go back to see. Actually, no, this is not the right one. This is some afternoon trading, which didn't lead to anything really. I think this is the right one. Yes, here we go. So POL, again, it was halted up, so we're gonna pull it up. And we got 870, right? So let's watch this resumption here so you guys can see this crazy trade that I'm going to take here. Right, so watch this. Again, can we dip and then rip? Right, so I'll pause. So we open up at 920, right? It's going to push. It goes higher. Can we dip? It dips. I take the trade within the spread. And this is where it does get... Okay, let's talk about the risk here. This is where there is a ton of risk, right? So for us to get into another halt up, we have to go to 1012, right? And right here we have 930 by 960, which is a 30-cent spread, which essentially means I can be in anywhere from 31 to 60, depending on what goes on with the market makers. So buying right here, what is my risk? Well, the stock could continue to drop, in which case I'm going to look to sell as fast as I humanly possibly can. So that might mean me cutting the trade at 20, me cutting the trade at 15, me cutting the trade at 10, and I can lose 30 cents, right? I can lose 30 cents. It's possible. I can be down 3 to 400, 500 after this trade if it goes against me. In fact, I had my worst loss ever on the 28th of December, losing 2,700 in a similar trade to this one. But what I will say on the other side of the risk is the reward. And when there's good market sentiment, aka the market for this small cap stocks are hot. You know, stocks are aggressive. The trends are working. Halted stocks are going higher after they dip, they rip, and they keep going up and up. The opportunity is there for me to be aggressive when things are going good. There's gonna be a time where this type of setup does not work as well, and you know what I'm gonna do? I'm gonna stop trading it. I'm gonna ease off. That's what gives me that discrepancy in the right side, the right direction, to the upside. That allows me to manage risk, right? So I'm in right here. And the moment this thing drops, and so again, remember, I could be in between 60, 30 and 60. Where am I gonna get the fill? You best believe they're gonna give me the highest possible fill, right? So this is the risk. But look at the spreads: 21 by 60, 31 by 65, right? So right here, I'm gonna give this thing a chance. There's 95. I'm selling into the spread there to take off some gains, and I don't get a great fill initially. So this the very first trade of the sequence right there ends up being a bit of a botched trade, right? So things that could have been a little different. Maybe we could have been a little bit more patient. We could have threw out an order on the bids to get in maybe at 25, 30 rather than being in a little higher, right? So, but that didn't discourage me. Right here, I'm being patient. Our high is at 95, right? 995. So I'm watching, and if this thing wants to continue to make a new high, I'm gonna go long to try and anticipate the breakout, right? So the ask price comes down a little bit, and I'm being patient right here. I'm just waiting, and I'm gonna get long right here for break of 50, and in the moment of me doing so, the stock is literally going to teleport all the way to $10. So this becomes now another pattern that we look at, another edge, which is called the break and hold of the half dollar, the break of the half dollar. 50-cent levels, $1 levels are key levels, whether it's 250, 350, 450, $5, $6, $7, $8. But I will say there's still, when it comes to these levels, we're not just going to buy a random stock that's at that level. There still needs to be volume. There still needs to be, you know, whether it's a pattern like this where it's the halt resumption, a 3-bar play, a wedge pattern, bull flag, it still has to be within the context of one of these patterns that we look at, right? So right here, this is within the context of the halt resumption, the dip and rip. We've dipped to 20, we've been holding 20, and I'm like, you know what? I need to get in because I think this thing might continue for a new high. And the moment I buy, in fact, I could have been in a little sooner because this is cutting it really close. I could have easily gotten a higher fill here. But we got a great fill in the spreads because we bought between 40 and 50 right as it was about to go. We got a great fill in there, and immediately we're selling it higher as it's going up into the new halt. But let's in fact, the halt level got the halt level got extended. Let's come back. So we had 12 right there. In fact, the spreads were 34 by 50 when I bought. Right here. So the moment the order shows on the screen, because there's a delay between when I buy and when this thing on the screen shows up. But anyhow, I'm in. Great timing. Couldn't have been any better. It dips right here, and the halt level is going to extend. The halt level is going to extend, and we're going to take an aggressive trade right there. This is then, can we, again, going back to the whole dollars, can we hold above the whole dollar? So the moment I see us lingering here, right, there's 10, 12. The bids drop back to 70, but immediately it's back over 10. It drops to 88, but it's back over 10. What this tells me is that people are buying and not a lot of people are really selling. So right here, is this risky? And what is my stop right here if I'm in at 10, 10 like I am? If selling starts to come in, I'm looking to cut the trade very quickly, 990, 980. But in terms of the upside potential, I'm looking for 60 cents, which is to the new halt level. So if I lose 20 cents, even 30 cents doing this, I don't mind, because I want to try and make twice as much as I could potentially lose in a trade, right? Or more. Can I make 3 times as much as I'm looking to risk on the trade? All right. So right here, I'm like, oh, this, there's no real selling. Look at this tape versus the tape on a different stock right here, LVPH at the time. There's like red, people selling at or below the bid price. Nobody's selling right here, really. So I'm like, you know what? I'm going to go ahead again and give this thing another chance. And boom, there's 58. I throw out the order on the ask. We're going to get the fill right there. And boom, great trade. So again, going back to the example of 1,000 shares, the stock moving up $1 a share, the risk is ever present. But if you understand the strategy, your discipline, you can thread the needle. I'm not going to sit here and say it's easy, because it's not. There's days where I have a hard time. So, but the thing is that's good about the market is that we can control how much we lose. Meaning, we can size down. We can size down. We don't need to be taking big share size. You can do this. You can do this with 2 shares until you become very efficient, and then at that point, it's just mentally understanding. I'm just putting a little bit more weight. I'm not going to change what I'm doing fundamentally. So that was POL. The other stock here, we'll look at the chart. It wasn't as great. We had a hard time. We had a hard time with LBPH, and let me show you guys this. Like I tried, man. I traded this thing throughout the afternoon here. Look at all these trades. I'm using 500 shares, so I'm not getting aggressive because I'm not able to capture anything. But I'm watching like a hawk. I'm trying and I'm trying and I'm trying. Let me get the 5-minute chart in frame, okay? Fair enough there. Yeah, I'm trying, and I just can't capture anything. So I came after this big green candle. I'm trying to buy some dips. I'm trying to buy some breakouts over here again. And just to no prevail, like not able to really get the good trades on this one. Some of the breakouts are going to catch me off guard. We're trying on the bounce move up here. We're getting topping wicks. So I'm trading all over this thing, but just no follow through. So in terms of patterns, right? Let's get this stuff off the screen. Let's talk a little bit about some of the patterns that played out here. So coming into the open, this particular candle that I traded was price action mostly, right? Price action trades off of level 2. The first official pattern is going to come here, and this is going to be a bear flag breakdown reversal, right? The bear flag reversal. So picture your country's flag, right? Just picture your country's flag on a flagpole, right? Sometimes maybe it's a little triangular, Super Mario Bros. Style, right? So that's a bull flag. A bear flag is the opposite of that, right? So right here, bear flag. You got to be able to recognize and see the patterns without there even being drawings, right? So pay attention to what's happening here. Once we drop, it's giving big bottoming wicks. So people are buying up the lows of the candlestick 3 times, 4 times, 5 times. So there's buyers coming in lower. When it breaks over this level here, the only issue that I had is that it moved so fast, I didn't get a great entry. And then when it got up a little higher, the spreads were a little bit bigger, and I hesitated. I hesitated to buy in the spreads, or else I could have been in here, selling here. So, I missed the stock, guys. So this candle was a little tricky for me. A 10,000 share bid came in, which is also another thing that we look for in terms of an edge. Early in this candle, someone was looking to buy 10,000 shares. We can do the math, right? At this time, we're around $18, $19. Again, let's pull out our calculator. $19 times 10,000 shares, right? Someone was looking to buy $190,000 worth. That does provide a small support, right? Because if I'm buying 500 shares and someone is looking to buy 10,000 shares, I can essentially sell my shares to that person if the stock is not moving higher, if I'm quick about it. Now, other people will also have that intention, so you have to be very fast, right? But this thing flew up, and I didn't take the trade there, or else I could have started the day here up 1,500 on the stock. But anyhows, we had the bottoming wicks. The moment that we broke 1816 and the 1 minute candle made the new high, we ripped up higher. So this is a good push. Coming down, the second pattern that we're going to really get here is going to be the VWAP pullback. And I did not trade the VWAP dip today, but it worked out splendidly. The VWAP is this white line, volume weighted average price, which is a respected indicator in the space. It's going to come into the level twice, 3 times, it's going to hold, 4 times, it's going to hold. So if you're buying it low down here, the key is to be in as close to the VWAP level, the VWAP level as possible, as we're flushing down and bottoming out. Level 2 can help us take these trades because we're seeing the price action real time, right? And we're keeping the stops tight. If I'm in here and this thing doesn't go, I'm out right here, right? Tight, keeping it as tight as possible. But when it works, let's come over here. When it works, we got a low of 24. Let's say you might have stopped out at like 17.05, 17.10, maybe 17. You lost 24 cents. On the bounce, we got to a high of 18.05. So from 1823, or excuse me, from 1724, we got it to a high of 18.05. That's an 80-cent move up versus like a 20-cent move down where we would have been stopping out. The only way we get a huge loss is if it just continues to go down and it teleports. Sometimes this could happen. It just like teleports down. Like other than that, which doesn't happen super often. It happens, but not super often. So that's how we can manage the risk. Right. So these are all of the patterns that we had on this one. It broke down, and then on the way up, right here, we're gonna get this is another bear flag reversal here, essentially. Not as obvious, but you know, we bottomed out over this ridge right here of 1660. It ripped up. And then we get our first flag, and this flag did not work. It pulled back, right? So this is our first bull flag. It did not hold up super well. We came down. And even right here, right? This is also like a bear flag again. So, you know, we have tight lows down there, and then we make the new high over the level again. So it's like a mini consolidation that's a little lower. And so it's like essentially a lot of the same entries over and over again, right? So because you can go like this. This is a consolidation right here, right? Boom, which we're going to go up or down. We start breaking out over the high. Can we keep pushing? And that's what's going to happen. So it's going to go into another longer consolidation here. And then it's finally going to open up a little bit. We get a bit of a quick pullback right here. And of course, there's some baby pullbacks along the way. The issue with this stock for me was the spread. And it was, despite looking good on the chart, it was a little grindy. And I think the combination of those two things is what got the best of me. Right here is where I ended the live stream, I believe. I thought it was finished after that. Actually, no, I might have ended the live stream over here. But we did a red to green. And we had topping wicks here. Short sellers are definitely watching at this thing in this area at highs. And from there, it pulled back and then it went higher. But, you know, it wasn't clean for me. But yeah, we're going to end it here. We're already pushing 23 minutes. Guys, be sure to hit the thumbs up, right? Consider subscribing. This is our first day into the new year. It's a great day. And we're looking forward to coming back tomorrow and doing well again. As long as we can be disciplined and we can stay focused, we will do well. Especially in hot markets. Like hot markets, we will do well if we can stay locked in. So feel free to check out the links down below. If you want to get involved in the classes, utilize coupon code DREAM for 50% off. All right, utilize coupon code DREAM for 50% off. Check out the classes, check out the chapters. This is everything that's included in the classes. One-on-one mentorships, weekly Q&As, our archives, which is the video that we just looked at, right? And I say our because there's 3 mentors, all 6-figure traders, verified, right? You can gain access to the chat room as well by becoming a student. So yeah, consider checking out the classes. The curriculum itself is down here. And of course, this is not just it. You can expand and it shows you everything. It's quite detailed, right? We got 32 chapters. You guys can come down slowly. So, you know, we start off a little beginner friendly and then it gets progressive. Stock market 101, right? Profiting in the stock market, trading tools and softwares, candlestick and patterns, right? So it goes slowly, support and resistance, time frames, right? Marking out charts, technical indicators, right? Order types, and so and here's another thing, right, guys? Do you need a class to learn? Do you need a course? You don't. I didn't take a course myself, but I do think for those of you who are looking forward to having efficiency when it comes to time, having everything organized in one place, being able to reach out to the mentors and ask questions, setting up video calls via Discord or Zoom, these are the things that you can gain from being in the class. You can be a part of the community, right? So we talk about simulators and all these different things, right? Finding stocks to trade, recognizing the setups and the patterns, right? Here are a list of some of the or all the patterns that we look for, right? The panic flush, the 5 minute pullback, the opening surge, the bear trap, the wedge, the red to green, the cup and handle, the baby pullback, flat top breakouts, 3 bar plays, and a lot of these patterns are like global, but we're showing you how we do it because there's different ways to trade these patterns. Some people are watching the same exact pattern. They're in once, 10 minutes later they're out once. They have a sweet gain in there. Maybe bigger size, maybe smaller size. For us, we are hyper scalping, which means we're in and out hundreds of times throughout the day on these same patterns. So are these patterns out there? Of course they are, but we're showing you how we trade them. Other people might do their own thing. Some people love buying dips, like, big pullbacks. Other people love buying higher. We have like a mixture of both, but we don't hold for 5, 10, 15, 20 minutes. We are in and out within seconds. So there's pre-market analysis, daily chart analysis, the 200 EMA, right? Intraday chart analysis, level 2, right? Risk management, and it list goes on and on and on, right? Trading routine, the edges, right? All of them right here. So first, when it comes to pattern recognition, it's a matter of how do you identify the pattern, what it looks like. We have a lot of diagrams and examples, and then right here, when it comes to the edges, it's us trading those patterns, recognizing it in the moment, showing you what we did in the areas to get the trades, and then trading psychology, and then all the way down here we got lectures, and then we have the uh, this is a showcase, and then the archives. So there's a showcase here just so you can see a little bit of what we do, and then we probably can update this too. And then we have the ongoing archives, which you can see is very detailed. Almost like every day we're uploading here our live trading. So there's no hiding anything. There's no, hey, RT didn't upload today. No, everything is here. All right, so check out the classes, and I'll catch you guys later. It's been Relentless Trader. Hit that thumbs up on the way out. Consider subscribing to the channel, and I'll see you guys in the next one.